So we're just going to go ahead and get some of the technicals behind us here and get Jared all set up with audio and visual. And then I'm going to do a brief introduction and turn things over to Jared. Okay, great. We see
Hey
your
guys,
opening slide.
good morning. Hopefully you guys can hear me loud and clear. Am I coming
Yes,
through okay?
Jared, you sound terrific to me.
Excellent.
Okay, super. Well, folks, I think we're ready to go here, and let's get things going. So our next presenter is Jared Wesley. Now, Jared is a moderator in the Pristine Method Trading Room and a Pristine Trader coach. One of Jared's focal points is that he has this keen desire in wanting to help traders just keep their approach to trading simple. He believes, quite honestly, that less is more, and we certainly heard that from Steve in the first presentation. Jared avidly preaches emotional and educational discipline is the cornerstone to being consistent and successful as a trader. Now, Jared is proficient in trading the markets across multiple time frames, but he specializes in early morning and intraday trading on the shorter 2-minute and 5-minute charts and has a high degree of success doing this. He makes regular trading calls on a daily basis in the Pristine Method Trading Room and regularly contributes to the Pristine Lesson of the Week. And with that, please join me in welcoming Jared Wesley to the Trading Pub and his topic today on equity proprietary trading. Welcome, Jared. The floor is now yours.
Thank you, Rolly, for that warm introduction. It was very generous and kind of you. Thank you guys for all being here. Trading Pub always puts on a great event. This is my third or fourth time doing one of these, so I try to get to them as often as time allows. So again, I appreciate you guys having us, and I also appreciate the folks that have stopped by today. I know everybody's got a busy schedule. You know, I haven't completely decided yet because I've been thinking about doing some live trading here this morning, and one of the reasons, in case you're curious, I've been a little hesitant is the morning list that I have today is pretty mundane, pretty lackluster. So I may do a little bit of live trading. I have about 10, 15 ideas that I'm looking at. And if I do so, I'm going to kind of pull this camera down and put up a live screenshot of my platform and what I'm doing. But I'll make that decision in a few more minutes. I'm here, guys, today to talk a little bit about prop trading. I have a prop trading account that I personally use as well as a retail account. So I have kind of both sides of the road pretty well understood. And a lot of traders out there have heard the term proprietary trading or prop trading. They're just not sure exactly what that is or how it could benefit you. And that's what I wanted to talk a little bit about today. I'm going to talk, about quite a few charts as well, but I just wanted to give folks a better understanding of what prop trading is and something that I personally use. So again, I have a pretty good understanding of how it can benefit folks. Yeah, today maybe $100, $200 risk, Roger. That's kind of on the low side, but that's, if I do trade, that's probably what I'll do. Before I get started, though, guys, just a quick disclaimer. Trading is risky. I know everybody comes on and says the same thing. Trading is risky, be careful, etc. But, I'm going to take it a step further, and I'm going to tell you guys that this is a serious business, and if you don't treat it as such, you'll be one of those stories that people hear about and read about that blow up their account. So I just want to say it in a more, I guess, direct fashion. Have respect for the markets, okay? Whether you choose a Pristine education or somewhere else, there's a lot of great places to learn how to trade out there. But the one thing you have to understand is your competition, which I'm going to talk about a little bit later, is pretty serious. So please respect the markets. This is, even though it's just a little electronic number on your screen, it's a serious business with serious consequences. So I just kind of wanted to get that out to everybody. I know people go, yeah, I know, but it's a lot different when you talk about it versus when you actually do it and really put your own money on the line in trading. A quick bit about Pristine. We were founded 20 years ago, guys, by Greg Capra. He's our CEO. He's written multiple books. He's the creator of the Pristine Method, which is the foundation course that we have here at Pristine. He's also a 6-time winner of the Money Show. In fact, I don't know that he's ever lost in the Money Show live trading challenges, which I know many of you are aware of. A little bit about myself. My name is Jared Wesley. I've been here at Pristine for about 8 years now. I spent some time on an institutional trading desk in New York, and I got a little taste of what Wall Street's all about. And I can give you guys an honest opinion that there's a lot of very intelligent folks and on Wall Street and successful people, but when it comes to understanding trading in the technical realm, technical aspect, there's not too many people that understand it so well. So don't think that all those folks that are wearing suits and ties to work every day have a big edge over you in that respect. They don't know a whole lot more about the markets than many of you guys do. So don't be so much intimidated by that. I moderate the Pristine proprietary trading room, which is what we call the black room. And I also teach several courses here at Pristine. So I've been doing this a little while, and my main focus is the morning. I love to trade the open. It's my main focus, guys. And I trade, generally speaking, from about 9:30 a.m. to 10 to 10:30. It's rare that I trade more than 30 minutes to an hour a day. And the reason I bring that up is a lot of folks don't have a ton of time in their schedule to be trading. And some people only have an hour or so a day. And I'm here to tell you emphatically, and I'll show you some results later. I'm here to tell you emphatically that if you have, say, from 9 to 10 o'clock or 9 to 10:30 in your schedule open, you can make a handsome income in this business, 6 figures plus, if you just have an hour and a half a day. So don't think that if you don't have 6.5 hours to sit in front of your desk that you can't do this successfully. You absolutely can. All right. You know, a lot of people, I joke a little bit. I get real serious at times, and I pull back and joke a little bit. But a lot of folks, I mean, this is honestly how they find out about trading. You know, you see this little guy right here. You know, I think you guys know where that guy comes from. As cute as he is, this is not honestly where you want to be learning how to trade. Okay. And as you can see at the bottom, and you've probably talked to a lot of folks, most traders don't make it. You know, most traders fail. Right? So it's something you want to take seriously. You don't want to be looking at some TV commercial, just buying all the hype out there, because there's a lot of hype. I mean, I get the emails all the time. You know, this little Forex black box turns $100 into $4,800 in 37 minutes. Just plug in this. If it were that easy, why are you selling the software? You know, if I had a golden nugget like that, believe me, I wouldn't tell a single one of you about it. As much as I like you guys, there's just no way. Right? So, you know, you just have to realize that there is work that you know, you have to put into this. All right. So with that, guys, I want to pull the camera down for a second. I think I'm going to, you know, just keep an eye on, you know, I may not take any trades, but for at least the next 20, 30 minutes, I'm going to keep an eye on the markets and maybe do a little bit of trading here. And then we'll come back to this. Okay. I have about 20 slides I want to get through with you guys. And the next thing we're going to talk about after I'm finished that is, you know, why traders fail. Okay, they're not running a business, and they don't have a business plan, and they don't have a trading plan, and they don't have trade tracking spreadsheets, and they don't know what competitive commissions are, and they don't have a reliable platform. I mean, I'm seeing this all the time. Somebody yesterday was on, I don't want to say the name of the platform, but he got filled in an area that was just totally out of line with where you should be filled, you know, and you just get a sorry from your platform. You know, so you need one of those direct brokers. So you have to have a realistic approach in this business. Okay, have you really thought this through? Are you just coming in and just, I gotta slap some money into account? You know, I think I'll just slap some money in there, and I'm going to be a professional trader. Opening a trading account does not make you a professional trader. Okay, so let me pull this down, guys, and then I'm going to come back to this in a little bit. So you're going to see a blank screen for a quick second. Okay. And then you're going to see another screen come up in just another second. All right. I wish I could show you guys. I trade off of 3 monitors, and I wish I could show you all of those, but the camera won't allow it. So I'm going to show you as much as I can on one. Give that a second. Okay. So what you're seeing here, guys, the market's going to open in about 5-6 minutes. What you're seeing here are 3 charts, a 5-minute, a 2-minute, and a 1-minute, and you're seeing a watch list there of stocks. And on the right-hand side, you're looking at, you know, an order entry box. You can see my account, you know, all this all this other stuff in here. So I have to kind of move this across the screen. I apologize, but I had to move it to a different monitor there. So you might see that chat room come across a little bit. All right. Again, I wish you could see the whole setup because I'm going to be looking at a lot of other charts and a lot of other things, but I'm going to mention them as I go along. You'll see these change, et cetera, and so forth. But the stocks that I'm looking at right now, guys, for the open, I really like this CAG. Okay, I've been kind of keeping an eye on this. It has one of the nicer gappers, and another thing too, because I can't show all the monitors, I'm going to just explain these things a little bit after I'm done. Okay, and I may not take a trade. I mean, I'm looking at the gap list this morning, and I'm not terribly impressed with what I see. So if I can't find anything in about 15 minutes, I'm going to get back to the presentation. Okay, normally this is one of the slowest times of the year, October, September, et cetera. But there's a couple ideas out there that are interesting. I'm looking at this Yahoo, I think is a little bit interesting when the market opens. This CAG is a little bit interesting when the market opens. So again, there are a couple things that I am looking at, and I'll keep you guys kind of posted. You'll get to see everything I do. If I place an order, you'll get to see all that stuff in here, et cetera, and so forth. Probably keeping it pretty low today, maybe 100, 200 bucks on the risk level. Normally I'm in the $500 to $1,000 range, but again, I have a little bit more distraction when I do this for you guys, and I have a lot less, I guess, chart space with the camera up and all that stuff. But nonetheless, if I see anything I really like, I'm going to talk through it with you guys, and we'll look into maybe taking a few trades today. Just a quick FYI, I'm an equities trader. I do not trade options. I do not trade Forex. I don't trade futures / E-minis, et cetera, and so forth. I only trade equities, and I only trade the first hour of the day. So very straightforward, very simple approach. A lot of folks will tell you that they're simple, but I really am simple. You'll notice, what do you see on the charts there in front of you guys? Nothing, right? Those charts, you see a little bit of volume at the bottom right in here, okay? And you see some candlesticks. All right, I just want to make that clear to you guys. A lot of people are going to come in and say, oh, it's so simple, it's so simple, it's so simple. It doesn't get any simpler than what this chart is. You have to have price on your chart, right? Otherwise, you just have no idea what's going on. And then volume. Hey, is the stock liquid enough that I can actually trade it? Can I get the shares I need to get? Right? So again, I want to reiterate, I'm beating a horse a little bit. A lot of people are going to tell you how simple their trading is, but it doesn't get any simpler than just simple price and simple volume. There's no Fibonacci's on here. There's no moving averages on here. There's no stochastics, Bollinger Bands, whatever you want to call it on here. Okay? I find that stuff to be unnecessary. Okay? Now, I'm not saying people can't use those things effectively. I'm not trying to say that. I'm just saying I feel that you don't need those things. Okay? Because I would get bored to death. A lot of people ask me that, TCAT, and if I traded futures, I'd probably get lulled to sleep, simply because most of those futures guys trade about 3 to 5 different things, and well, let's be honest, the market gets boring sometimes, right? I mean, if you take a look at the Qs, I mean, how fun is that, right? That's no fun. And I take a look at, well, that's pretty fun actually, right? But there's a lot of times of the day that there's just nothing. Whereas stocks, I can typically always find some stock out there that's interesting to me. Not always, but usually. All right, guys, the market's going to open in about a minute and a half. I'll be honest with you, at the moment, CAG is what I like about CAG, somebody asked me, Kenny, is that it's gapping over a little bit of a red bar with a bottoming tail. I'll show this later. I don't have the chart space at the moment to show it because I can't show another monitor. And it's gapping over a double pivot top on the weekly. It has room to about 34 bucks. The problem is I really wanted CAG over 33. That's the main issue I'm having with CAG and why I'm not as excited as I was about it about 20 minutes ago. I was really excited about it 20 minutes ago, again, because it was holding the $33 level, and now it's up at $33.17. So I'm also looking at this Vivus today, and that's something I'm going to keep on my list, okay? And I'm looking at a few other stocks, guys. I have CAG, I have Vivus, I have STLD, PWE, JKS, et cetera, and so forth. So the market's going to open here pretty soon. And again, this is a pretty poor list I have this morning, so I may be pretty pretty patient, and it's rare I don't take a trade, guys. I think this entire year I have 2 days for the whole year that I haven't taken a trade. So there's the market open. I'm going to have to kind of minimize the screen a little bit, meaning some of your comments I might miss. And you can see the CAG is already kind of off to the races a little bit, and I don't have a great entry on that. This Vivus, however, guys, is pretty interesting here. A little late to the Vivus party, I think. 450 was the ideal entry on that. All right, so we'll be patient and see what happens. Again, this is a pretty lackluster list I have today. I think the next good idea I'm looking at, guys, is Infi. I'm not a big ADR trader, but if you look at Infi here, I think this is kind of an interesting idea. So we'll kind of keep that out there. All right, it's pretty spready and whippy at the moment. Shoot, there it goes. It's got about a 10-cent spread. You guys can't see that on here, but it's got about a 15-cent spread at the moment. All right, that CAG is continuing higher, so the only way this is tradable at this point is a pullback. And again, I really wanted this over 33 bucks, and it would have been a pretty nice play. Other than that, guys, most things are pulling back that I see. I'm looking at some of the short ideas. One thing we haven't talked about is the market. We're gapping into resistance. You guys can see that right here. $100 is that resistance area on the SPY. Same deal, 201.60-ish. So we have a little bit of room to move up, but you know, not a ton of room. All right, and you can see that a little better on a 15-minute chart, on a 60-minute chart, etc. All right. Okay. Again, guys, just gonna spend about 15 minutes doing this because that's typically the time of the day I trade. And I'll be honest with you, I'm typically somebody who takes a trade in the first 1 to 3 minutes of the day, and that hasn't happened yet, which is unfortunate. But at the same time, there's just not a lot of great setups at the moment. PWE I like in this area, but it needs a couple more minutes, and there's a pivot to the left on the daily chart, and I'll show that to you real quick. See that pivot right here? This is my concern, in case you're wondering why I'm not getting super aggressive with that entry. Right. PIR is a little interesting on the short side, guys, right here. The best thing I see really is that PWE, and I'm not in love with it. Okay, I'm not in love with it at the moment. PIR, pretty big gap down at 15%. And if we can see the PWE sit here, maybe we take this for a 15, 20-cent pop simply because there's resistance, again, at the 785, 786 area, okay, on the PWE. All right. Like I said, so far, guys, you know, if I'm looking at my list, and I'm looking at this list on a different screen that you guys can't see, I'm not super enthusiastic about what I'm seeing on this list. So one of the things about being a good trader, guys, is being patient and waiting for your setup, waiting for your pitch, not going out there and just gunslinging. DRC is a stock that's been strong the past couple of days, but this needs to get up near the 75 range to even have a chance to even consider looking at it. It's not doing that. CAG, guys, we may, if this thing engulfs and comes back up, it's not ready yet, but if the CAG comes back up and engulfs this topping tail, that's something I would consider. Pretty wide stop at 30 cents. Yahoo is coming back up a little bit. That PIR, we were talking about this kind of under this area, and you can see how whippy this thing is getting. Yahoo's holding okay, guys. This is an interesting idea right here. It's a pretty sloppy pattern on the Yahoo. CAG is getting hammered at the moment. So again, this is where the patience comes in. You know, you get in that thing too early down here, and boom, now you're not a happy camper, right? I would say the Yahoo, wow, actually CAG, guys, I'm going to keep a close eye on this. We might be able to catch this on a pullback. Actually, right there, guys, at 50. I missed my opportunity here, guys, at 50 on CAG. That pullback is what we would consider mini climactic, and probably should have been in that thing right around the 0.50 mark. Yahoo's my next favorite idea, guys, at the moment. If Yahoo can settle in at 43.10, we're going to take a shot at this with hopefully a 20-cent stop. Right now it's about 30 cents, but the Yahoo I'm keeping an eye on. It's got great relative strength. The Qs and the Spider are pulling back a little, and the Yahoo's staying pretty strong. So the Yahoo is one of my top watches, but it needs to give me an entry. And that CAG, guys, boom, that was a 50 or 60-cent pop, or just a nanosecond too late. And I think Yahoo, guys, will try this with about a 15-cent stop on Yahoo. Okay, right there. I really wanted this to close, so this is a bit of an aggressive entry. All right, again, a bit of an aggressive entry here on Yahoo. So we'll look for 15 to 30 cent stop. Again, this was not the best entry on this. The best entry would have been $43 right there. Okay, but if we can get half of this out at 30, we kind of just missed that, didn't we? We got to 27 on Yahoo. Got in at 10, yeah, that's about right. If we can get back up to 30, we'll take half off, guys, and then leave the back at 40 for the moment. With Yahoo, guys, I'm a tight trader, so I'm going to go, because it moved 1-to-1, I'm going to go to even on this thing. Now, that's tight. We may come back and get tagged out at 10. That's a very close stop loss, right? Okay, so we'll see if this thing shakes us at that area. All right, so my order is in at 43.10 on the backside. If this thing pulls back real quick and shakes us, then that's what happens. If we hit 30, that'll be a first target on this. So right now it's a nickel from a first target, and a dime from tagging the back on this. Wow, JKS just moved up pretty good. Wow, on the JKS. All right, Yahoo. It's a bummer, guys. We're just a couple pennies from that first target, kind of in that in-between area. You know what I mean? Where you're just almost ready to hit market on this thing, just because you get 90% of first target. It stinks to give it all back, right? 28 areas that first target for me, and 10's our stop. And right now it's looking like it's probably going to come back in and get us at 10. Right? If you look at the level 2, it looks like it's probably going to come back in. Look at the 1-minute chart. See it right here, guys? Right? And here we go. We're probably going to get tagged at even on this thing. That's a bummer. I think it's pretty good chance that happens, guys, that we get tagged at even at 43.10 on Yahoo. All right. Yeah, almost certain of it at this point. It would be very fortuitous if this thing held 43.10. There it is. We're out at even, guys. Actually, we got filled at 11, which is, oh well. So that's a break-even trade right there, guys. And again, that's my style of trading. I don't stick around. If they leave a topping tail like this, guys, I don't stick around for that. Now, again, it's a bummer missing a target by 2 pennies. But you know what? That's part of the business. That's part of trading. And again, this will probably set up later on, right? But you see what I mean by not sticking around sometimes? Now, I'm not saying it won't bounce, because there's a good chance it'll come back towards the lows and bounce again, right? But as much as it's a bummer missing that target, it's also nice not taking a full stop out, right? So it's a give and take in trading, guys. You have to, protect on both sides, and that's just part of the business. It's interesting because a lot of people think trading is all about or only about winning. Trading is just as much about managing your losers as it is your winners. Okay. Now that's my style of trading in terms of managing losers as well as winners. Now, some other people might not trade as tightly as I do, but again, it's a specific style that, or one of the styles, I should say, that we teach here at Pristine. So, it is what it is. Big red bar comes in. This is interesting at the bottom here. You see this 1 minute chart, guys, right there? This thing looks like another buy setup right in here with a stop at the low of the day. This thing could be interesting down here. I'm going to give it a little more time because the markets are kind of chopping around right now. So I'm going to give it a little more time. All right, the CAG right now, again, I like that it's holding, but I'm not interested in this thing until it gets to 33, and I do not want a 40-cent stop on this thing. Okay, I went long on the Yahoo. Okay, Dimitri, I use two platforms. I use Fusion for my prop account, and I use TradeStation for my swing trading and longer term. Guys, I like this CAG, but a 35-cent stop's not going to get it done. Right here on CAG, right there is the entry on this thing. 33.03. The stop would be 32.60. It's just 45 cents it's going to kill my risk to reward on this thing. All right, it's going to kill my risk to reward. All right. Let's see, TKMR. Yeah, I saw that on the morning list today, and yeah, it's doing okay on the TKMR. So guys, as an example, we're 10 minutes into the market day, give or take, right? If Yahoo works, I might be done for the day sometimes, right? If Yahoo gets to say 43.50, I take half off at 30, half off at say 40 to 50 area, and you're done, right? Maybe you take one more trade in the next 20 minutes or something like that, okay? If it doesn't, okay, maybe we'll look for another idea, okay? But this is what I mean by you can find good opportunity in the first 30 minutes of the day and not sit around for hours and hours. Guys, this CAG is very interesting to me, okay? Favorite idea at the moment, but the stop loss is too big. I need something a little tighter than that. 30 cents would be ideal. 45 to 50 cents is just not. I need $1 out of that to make it work, and $1 on this is doable, but it's a long shot. All right. There was a nice entry on Guild. All right. Yahoo's still coming in. All right. So that's not what you want to see at the moment. It was showing some strength to the markets. Now it's a little weaker. One of the stocks that is strong to the market, guys, is STLD. But again, nothing we can do with it right here. We're too late on this. It's got to come up to the high and sit there for about 10 minutes. So I'm not interested in the STLD at the moment. I see some of my short ideas that I had not doing a whole lot either. BTU is the only one that really moved down in a nice controlled manner on this little sell setup. So what I'm doing right now, guys, is I'm going to some of my backup watches. Okay. I am looking at some ideas that didn't quite make the gap list, right? I have a gap list every morning that I look at, and these are kind of backup ideas that were not quite good enough to make the first team, so to speak, right? So right now the first team's struggling, and I think that PWE, guys, this thing might be ready on the PWE. I don't like the risk to reward to the left. I mean, we have a pivot at 786, and on this we'd be looking at about a 10-cent stop on PWE, right? And I wish we had more space on this because I really like this idea. You can see me hesitating here, guys. This is one that, you know what, let's give it a shot. All right. We only have room to 785. That's my big concern on this stock. We only have room to 785. All right. And that's going to have to be a full target on this thing. I don't want it to be. 1-to-1 is just not what you shoot for, right? 1-to-1 is not what we shoot for, but we'll sell half there, guys, at 785 if it gets there, and then we'll trail it out after that. But again, this is a concern for me because I don't like to take stocks that are right into resistance. So this is one you might see me get out of sooner than I normally would, because oh yeah, guys, MDVN is nice. Very thin on the MDVN. I like this. Maybe we'll give this a shot. 35-cent stop. Some range. All right, we'll give MDVN a shot, guys. Weekly's extended here. Big spread. Probably a 35 to 40-cent stop. Okay. And STLD is starting to look a little better. See it right in here, guys? This thing holds. This is something I'll be interested on STLD. Okay. Got a 2-minute 1, 2, 3. Get in at 40 with a stop at 27 on this right here. Right, you get in right above there with a stop right down here. This is probably going to be a good one. All right. Shoot, and there that one goes. Wow, RPRX, nice possible climb-o there, guys. WLT, that MDVN never triggered. This is, I wanted just a little more time on this, guys. Okay, honestly, I just wanted a little more time on this thing. I prefer this particular pattern on a 5-minute, and you know, we'll see. All right. At this point, guys, the PWE on this, the stop is going to get to 760 if this thing comes back against us, right? So we'll see that there, all right? And again, we had about a 10 to 15-cent stop on this thing. Oh, there goes the MDVN. This thing is a whippy stock. And there we go. Hopefully we'll get tagged out a little bit on that. There we go. And on the MDVN, guys, stop's got to go to even on this thing. Need a little more on this, guys. All right. I'm gonna move it just above that area. And PWE. See, this is the concern, guys, when you have a stock that is near. I'm going to move the stop up on this, guys, on the PWE. All right. We're going to go to 69, which is just below break even. Again, the concern here, just in case you're curious why I'm so tight on PWE, is that resistance to the left is a major, major concern, right? I mean, that's a serious concern, guys. It's not a ha-ha type thing. Let's take a look again at the daily. That's a tough spot right here. Do you see it right there? This is not a joke, okay? So I'm treating this as a stock that, you know, is basically at a target, but the problem is that target's 1-to-1, and we don't like shooting for 1-to-1 targets. All right, we're out MDVN, guys. We got a nice pop out of MDVN, and now it's, as you can see here on the 5, left a big topping tail. Okay, on this one, yeah, you know, we probably could have taken more off there, but you know, we took 2/3 off at that area. Okay, we took 2/3 off, so I'm okay with that. Again, I don't stick around for the pullbacks, guys. I like stocks that, and that was a beautiful pattern, by the way, Kurt. In fact, I'm glad you brought that up because we're going to be talking about this pattern specifically, exclusively today, guys. This is actually what we call a 1, 2, 3 pattern, or 1, 2, 3, 4, and I actually have most of my presentation based around this pattern. So I'm glad we got a chance to see that pattern in real time. Okay. All right. We didn't get much out of it, guys. We only got about 1-to-1 out of it because it didn't hit our second target. We had about a 35-cent stop on this. That was my stop right here, guys. Okay. So we got a little less than 1-to-1. Had this thing continued higher up to 100.90, we would have gotten just over 2-to-1 out of it, but it didn't. Okay. All right. It didn't. Yahoo. Yeah, Yahoo could be setting up. Guys, I'm going to be honest with you. I have to get into my presentation, so I'm going to be I'm going to dump half of PWE here at market. We only have 30 minutes left. And next target will be there, and we're just going to be done. I'm going to give this thing about 10 more minutes, 5 more minutes, guys, and that's it. Okay, and then I'm going to be done. All right, wow, look at Jinx Solar, guys. Nice pullback entry on the 2-minute here. Okay, see that right there? Nice on the pullback. Okay, this MDVN is holding. Here's the concern. This thing breaks 100, guys. Watch this thing tank. All right, I'm telling you right now, if this thing breaks under $100, you're going to see it drop 20 to 50 cents quick. All right, you're going to see it drop 20 to 50 cents. All right, PWE hit 85. It just didn't fill us. So we're going to be finished with this. All right. Now, that's pretty scalpy, guys, to be honest with you. This, I'm not going to lie to you. This is a trade, if you guys weren't here, I don't think I would take. All right, it's just there's not enough risk to reward in it. But, you know, you want to take some trades for people, show them that the Pristine method works. Maybe this thing goes up to 850, right? Maybe. But you're taking a trade into a double top pivot. It's a dangerous thing to do, okay? So this is a trade I probably wouldn't normally take. And just so you guys know, and I'll show you here in a couple minutes, my typical target, guys, is 1.5 to 2 to 1, all right? So my typical target is 1.5 to 2 to 1. Now, I don't always get that. Look at, for example, MDVN, right? This stock popped up about 1.5 to 1, right? So I took part of my shares off, right? We had 500 shares of this. I took 300 of my 500 off, and my back was just over 2 to 1. That's a normal trade for me. 1.5 to 1, I dump half, and 2 to 1, I dump the other half. That's a typical trade for me, okay? So today we only ended up with, I don't know, just under 2 to 1, maybe 1.7 to 1. We had about what, $150 risk on some of these trades. Nothing, you know, nothing big, which is, you know, pretty low. But all right, we're done. We're 22 minutes into the day, 3 trades in, and we're done. And Yahoo unfortunately came 2 pennies from a target, and then this MDVN came back and got us kind of at even there, right? Now I want you to think about the days where all 3 of those just hit and run, right? Where they just go like MDVN did. MDVN, did I say that right? And it just keeps going instead of pulling back in. Okay. Very short trades, only a few minutes. Is that what you prefer over staying? Absolutely, Ari. Now again, I'm not telling the folks that stay in for hours that they're wrong, right? I'm not saying those folks are wrong. I'm just saying that my style, and it's something I'm going to talk about in a couple of minutes, Ari, is getting in and getting out and protecting, like the Yahoo we saw earlier, right? That topping tail is a big time concern for my style of trading. I want you guys to think about it for a second. If you're only getting 1.5 to 1 on your trades, 2 to 1 on your trades, you cannot afford to take a lot of losses, right? You can't, you know, afford to take a ton of full stop outs. Okay, so that's the way I predicate my trading. I like to get that initial pop. I'll give it some wiggle room. Don't get me wrong. I mean, I'm not jittery enough that if I'm going to get out in 10 seconds, but I like the initial pop like we had on Yahoo. And if it starts coming back deep, then it's time to get out, right? There's no reason to lose money on something. So again, guys, this is lunch money today, all right? So I'm going to pull the camera down for a second. But before I do so, I'm just going to quickly go over these, you know, the daily charts and what I was looking at. Yahoo, guys, 60 minutes probably a better look on Yahoo. Yahoo is right here. Yahoo gets over 43. You see the line I'm drawing? It's got room to 44. You see that pullback and consolidation? Why was I looking at $43? Because of the 60-minute chart. And one of the things we teach at Pristine, and one of the things we do here at Pristine, is look at higher time frames first, and then we go backwards. It's an approach that we call the top. It's what we call the top-down approach. We start with a higher time frame because there's more money, guys. There's more institutional money in a higher time frame. And then we go backwards to find our lower time frame, 1 minute, 2 minute, 5 minute entry. Okay, so 43 you can see was that line in the sand. That's why I like Yahoo at that price point. Okay, the MDVN, thank you, Kurt. I didn't have it on my list. You can see is moving over this pivot and this pivot right here. Once we get over this area, okay, once we get over this area, all right, we're free sailing, right? There's nothing to stop this stock from moving higher. Okay, wow, that WLT is so tempting. Look at this WLT, guys, on the daily chart. Oh my goodness. I want to buy that thing so bad. At the moment, it's still lower. It needs to accelerate a little bit. On the PWE, which we talked about, that pivot was a big time concern, right? That pivot was a big time. You can't see it right here on the 60, but on the daily, that pivot was a big concern. This pivot isn't here, and I'm still in this stock, no questions asked. If this pivot isn't here, we're in this thing till about the $8 mark, right? That would be about 2 to 1-ish, okay? All right, so those are the trades that I took today, all right? I told you guys it would likely be quick, and that's what I showed you today is typically how I normally trade. 30 minutes in, I'm packing up. You look out your window and your neighbors are going to work and you're done, okay? I kind of like that, and the difference is they're sitting through rush hour traffic and you're not, okay? It's 5 o'clock somewhere, like they say. So I'm going to pull the camera down and I'm going to bring up the PowerPoint, and hold on a second. Oh, there we go. So just hold on 1 second here, guys. You're going to see an empty screen for a second. All right, but not to fret. I have PowerPoint coming back up in just a second here. All right. Guys, I'm, just a little side note real quick. I'm pretty open with trading. There's a lot of folks that will tell you, this or that about trading, but I have no problem, just as you guys can see today, even on a reduced risk level, I have no problem trading live for people at any time. I trade, I do this quite frequently for our Pristine clients, our Pristine students. I've done it for money show events as well, and rooms full of people. If you're decent, if you're good at this stuff, you shouldn't have a problem putting your P&L up for people, right? And a lot of people will make an excuse for that or this or stuff, but if you're decent, you're good enough to teach the stuff, then shouldn't you be good enough to show it in real time? But, I've done a few of these, and, a lot of people shy away from that stuff. So I think that's an important aspect in this business that some people, you go on the blogs, I'm sure you guys do, and you read this or that, and that's one of the knocks about a lot of folks in this industry. And at Pristine, we like to be a little different. And for our prop traders, I do this quite frequently, all right? And those that stop by and visit us, you'll see that. So guys, I wanted to just quickly, go over some of these slides, and I want to talk a little bit about prop trading in general. And again, I'm going to use some patterns, and I'm glad that we got to take that MDVN today. And by the way, that MDVN, guys, is now much lower, 99.74. We got out at the high of the day, right? Just FYI, the high of the day was 100.53. We got filled at 100.48. All right, a nickel off the high, and now that thing's pulled back, and it would have given us a full stop out. So there's 2 out of 3 trades today. 2 out of 3, Yahoo and MDVN, that would have been full stops had we not tightened. So you guys can see why I do what I do when I trade. All right, so when you go out into the marketplace, okay, when you go out into the markets, do you guys have any idea who your competition is? Does anybody know who your competition is? When you think about the markets. Now, obviously, we could make the statement, everyone is our competition, right? Well, you could make that argument, right? And you know what, John? That's a great point you make. It is true, right? It really is true. In the long run, it is ourselves. You're correct, okay? But who are the other market participants? Who are the other people, okay, that we're out there in the swimming pool or the ocean against? Well, when you say smart money, it's genius money, okay? Because a lot of you guys don't know this, but the 6 major banks last year, 2013, their net income was $74 billion. Now, not all of these banks spend their entire time in the markets, but companies like Goldman Sachs and Morgan Stanley, they spend a great deal of their time in the markets. Okay, they're investment banks. That's what they do. Okay, these folks, despite our little, comments or sneer comments here and there about how silly they are, they're not that dumb. Okay, when you bring in $74 billion between 6 of them, that's an average of somewhere in the neighborhood of $12 billion apiece. You're not dumb. Okay, and it would have been 92 billion, but they had to pay 18 billion in fines. Why do you think they had to do that? Well, for the shenanigans that they do. Okay, the point in me bringing this slide up, some of you go, oh, who cares? You should care, okay, because these guys are no joke, and I spent some time on Wall Street, and believe me when I tell you, they bring their pillows to work, okay? If you're a young investment banker, all right, if you're a trader, you sleep there sometimes. That's how serious they are, okay? So these folks, the Chinese wall you hear about between this department and that department, it doesn't exist. Okay, it sort of it does, like, you know, on paper, but not in reality. They share information all the time. My point is these are the folks that you are putting your trades up against, and you don't want to run in front of these people. You want to just swim behind them. You know, here's an example. You know, for example, with Goldman Sachs on upgrades. A lot of folks watch upgrades and downgrades. Okay, why in the world? Just think logically for a moment. Take out anything you know about trading. Just think logically. Why in the world would you upgrade a stock or even consider buying a stock that just moved from $6 to $25? I mean, it just moved from 6 to 25, and it did so in a fashion that was straight up. I mean, sprinted to this area. Green bar, green bar, green bar, green bar, wide range, huge green bar. Just that bar alone is $10. So if a stock moves up 300%, is that like the time that we should be buying it? Heck no. Absolutely not. Stay away, run. And this is when they're upgrading it. They're telling you, hey, come on in, the water is fine. NVIDIA hasn't sniffed that price level in 3 years. Okay? NVIDIA today is trading at $19, right? This is at 25, they're upgrading this stock. Something isn't right. Okay? Here's another one for Merrill Lynch, right? Netflix was a high flyer, pulls back, and then early 2012, like, oh, hey, downgrade. They waited for a 200-point drop, and then they down. What? I mean, if you guys are really trying to help me, and you're trying to help the average Joe, why wouldn't you tell me about it over here? You know, when there was still money to be made in it on the short side. Okay? Don't tell me it's a downgrade after I just dropped from 300 to 50 bucks. If you wanted to short it, there was no chance to do so because, well, they waited too long. And if you were long in this position, you gave all your money back. And now, since that downgrade, the stock is up $400. And I want you to take note here on the left. That little chart is right out of our textbook. We're telling you to buy this area down here. See it right there? We call it a retest and failure. We're telling you to buy it, and they're telling you downgrade, strong sell. Why? Why would you do such a thing? Well, I think it's obvious. It's not because they're stupid, right? I think that's obvious. Now, some people might say, oh, it's because they're not so bright. Well, 74 billion reasons says they are actually pretty bright, okay? But their goals and your goals are a little bit different. See, your goal is to make money. Their goal is to take your money, okay? It's kind of the opposite, right? You probably don't want to follow their advice. So you'll see here, that's a particular pattern that we teach at Pristine. This one's on a lower time frame. The one I showed you above was on a monthly. Why am I telling you that? Because all the patterns we teach here at Pristine, all of the patterns we teach are valid in all time frames. All of the patterns we teach are valid in all time frames. Okay? So this is a 5-minute. This is a monthly. Whatever you learn can be applied to any time frame. Okay? Can be applied to any time frame. All right? Now, I was telling you guys earlier, you know, a lot of people like to call themselves simple traders. I just traded for you guys live today with candlestick charts and volume. Nobody can deny it because that's exactly what was up on the screen. Candlesticks and volume. You'll notice there's a couple squiggly lines. They're moving averages. I quite frankly prefer not to have them. Okay? So when people say, I trade so simply, not me, other people, oh, it's so simple, it's so simple. Is it really? Are they really being simple? Okay? What I mean is, what do you really need to make money? Okay? Well, simplicity does make money. Simple is easier to learn. Simple is faster to learn. Simple is more efficient. And guess what? Simple makes fewer mistakes. Right? When you have to remember less things, it's easier to remember, right? Think about that. It's easier to remember 2 things than it is 22 things. Okay? It's effective. That's all that matters. It's effective. And guys, Wouldn't you rather be good at this sooner rather than later? I would. So if you had to learn charts plus volume plus some indicator plus another indicator plus some cloud cover, well, gosh, it starts to get really complicated, doesn't it? So I want you to think about this. What's the most important thing to a trader, guys? All right, other than the brain between your ears. What's the most important thing on a chart, guys? I kind of gave you the answer. Right? I can put some hints in here. It's not news, it's not earnings, it's not upgrades and downgrades, it's not hype, it's not Bob Pisani's tie color or Kramer's latest hot pick. Okay, anybody? What's the single most important thing every trader has to have to make money in this business? You have to. I don't care who you are and what you trade. Okay, when you go to the store, it's true there too. Price, period. If you don't have price, you have no idea the level at which you're buying. You can call it a 20% retracement, but a retracement of what? What's the price level, right? Price, period. Price, 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 price. Okay, everybody has to have price. Nothing is possible without this. If so, if price is so important, then why do so many traders focus on everything else except price? I want you to really think about that. If it's so important, which it is, why do we focus on everything else but the main most important thing? What's subjective? Cloud cover, Fibonacci, stochastics, Bollinger Bands. Everything else except price is subjective. Why? Because almost everything out there is based on price. Not everything. There's some that are based on volume, right? But almost everything out there is based on price. So why would we go to a derivative of price when we could go to price itself? Think about what I just said there. It's profound. I'm kidding. It's not that profound. Why would we go to a derivative of price if we could just go to the price itself? Why would you, if you can get it straight from the horse's mouth, why would you ask a friend? Just go to the source. That's what price is. But yet, I see charts that look like this. Give it a second. And they have, I don't even know what this stuff is. Okay. I see charts that look like this. Give it a second. And I don't even know I just see lines. Maybe you have a beautiful mind like Russell out what's important on this. But when I look at a chart, I would much rather, as an example, look at something clean. Just even take off these two lines. I'd rather just look at cleanliness, clean charts. But I see so many people that have charts that look like this. And I don't know what to do with this. I do see price in there somewhere, but you have so many things hiding that price. I see price in here somewhere, but all I see are lines covering the price. You don't need lines, you just need the price. Okay? So, guys, a professional trader, they're focused, they're disciplined, they're objective, and they're realistic. That's what professionals are. They don't waste time. Okay? They don't do necessary things. They're disciplined, they're objective, and realistic. Okay? This is the pattern I wanted to discuss a little bit today. Okay? This is the pattern I wanted to discuss. This is a pattern right out of our textbook. Kurt's like, oh, no, don't teach them the pattern. All right, we're going to talk a little bit about this pattern today. And thank you, Kurt, for the idea on MDVN, which was this pattern. All right? This is what we call a 1-2-3, a bullish 1-2-3 play. Okay? I want you to take notice of something. This play is 3 bars. It's occasionally 4 bars. Okay? Sometimes we go as high as a 1, 2, 3, 4. Okay? Where there's 2 bars in the middle. It's a wide range bar that blasts off. Okay? Followed by a narrow range resting bar, and then the trigger bar. This is what we would call the entry bar. Okay? This is the entry bar. So when we break above these 2 bars right here, when we break above that area, we're in. Our stop loss, our protective stop loss if we're wrong, is down here. Okay, right here. You can put it under the red bar or under the green bar. It's your choice. The red bar is a little safer. Putting it under there, it's a little bit wider, right? So bullish 1, 2, 3. Bar number 1 is a wide range bar. It should be, as it says, the first or second bar up. It should be the first or second bar up. Pretty simple. Bar number 2 is just a narrow bar. It's a resting bar. Okay? Number 3 is your entry bar. How? Okay, we're done. Just taught you all how to make a living. All right? That is my favorite pattern here at Pristine. We teach, I don't know, 30 patterns here at Pristine. I teach a lot. Probably my favorite because it's the simplest, all right? This is a real-time example. That's a book example. That's a real example. Wide range bar, narrow range bar, blast off. Where do we buy? We buy on this green bar. We put our stop right here. So I'm going to buy right there. We'll put our stop here. Guys, I make my living on this bar, okay? So when I ask you as traders, okay, which one looks closest to the picture on the left? Which one looks closest to the picture on the left? This is the picture we're trying to copy. You have A, you have B, you have C, and you have D. What do you guys think? Just take a guess. You have a 25% chance even with your eyes closed. What do you guys think? Which one looks closest to this picture? Okay. Wow, we have a few C's in there. So this one looks closer than this one, right? Remember, let's go back. Let's go back. First or second bar of the move, right? Igniting bar, first, second bar of the move, right? Right there. First or second bar of the move. Okay, let's try it again. All right, now which one looks closest? It's got to be the first or the second bar. There's only one answer to this because that's the third bar up, isn't it? And hold on, I'll go back. And we specifically said must be first or second bar of the move. Must be, okay? All right. See how simple that was? The reason I do this on purpose because a lot of people, maybe 30% will answer C. And then I go back and I say, hey, you missed something. But think about it. There's only one little thing that you missed. If you're learning another pattern and there's 97 different facets to that pattern, attributes, now you got to go back and you're like, well, I missed this, I missed that, and I missed this, and I missed that. You just missed one thing here. And the only thing you missed was it's got to be the first or second bar of the move. That's it. Okay, now we're pretty clear on what this pattern is. And D looks closest. First bar of the move. Buy it here, stop here, boom. Okay? All right? So I'm a big believer in teaching by example. And this is that trade. Okay? This is on, is that Twitter or Time Warner? I don't know. Is wide range bar, narrow range bar. I buy right here. It's 33.80. Stop at 33.40. There's the P&L to coincide with it. $1,100 in a few minutes. Now, I put the daily on because we always start with a nice daily chart. So I want a chart that has space above. Once I get over this pivot, guess what? There's room above here. Okay? Once I get above this pivot, there's nothing up there. That pivot is about what? 33.50, 33.60, something like that. If you were to draw a line right there, well, isn't that exactly where the 1, 2, 3 is? In this case, 33.80. So we're just perfectly above that area. I'm going to buy it right here. See where my cursor is? My stop is going to go under the red bar. 15 minutes, you're up $1 already on this thing. Pretty sweet. Actually, 10 minutes, you're up $1 on this thing. Okay? Here's another example. Remember I said you could add one more bar in there? So you have a 1, 2, 3, 4, right? So we just added one little thing to it, and that's it. Again, I start with a higher time frame. In this case, we moved above the consolidation. We gapped above it. So there's clean air up here. It's something we teach in our course. Wide range bar, resting bar, blast off. Entries 230-ish, stops 229. Guys, I like to put my, put it all on the line. I told you I wouldn't hide from it or back off or shy away from it. There it is, right? Entries 230. You can see it right there on the P&L, and you can see the prints. I put the prints. You have even the order ID if you want to go check it up. Okay, I'm out. What did I say, guys? 1.5 to 2 to 1. Isn't that what I said earlier? Okay, well, I have a $1 stop. So $1.50 I sell half, and $2 I sell half. $1.50 half, $2 half. Okay. Boom. There we are. All right. So I had 700 shares. I was risking $700 on this trade. It was a $1 stop. I bought 700 and sold 700. So I was risking 700. That means if I lost, and some of them do lose, and I'm going to show you that in a minute, I would have lost 700. But when I win just under 2 to 1. Right? About 1.7 to 1 to 2 to 1. That's my style. All right? And you can see here, this happened today on the Yahoo. This is basically a break-even trade. Right? Okay. Actually, this one, I guess I had some, I needed more shares on this, right? That's the trade. Those are the prints. Okay. All right. Dan, that's a great question. This stock, as you can see right down here, see it says CF peaked at 237.30. That's 7 to 1 for a patient trader. I'm not patient, right? I'm not patient. Does that make sense, Dan? So it's a great question that you ask, but on a stock like this, there is no target for me. There's no target for anybody because there's nothing up here. So you're going to ride this out either on a pivot management or a bar by bar management, and you can see I only show part of this, but it went to 237. So if you're patient, and you're probably more patient than I am, it's not hard to do. I shoot for 1.5 to 2 to 1 targets. As long as the daily chart has at least 2 to 1, I'm willing to take a trade. As long as the daily chart has at least 2 to 1. And guys, that PWE, where did it stop? Is anybody looking at PWE? It stopped right at that 86 area. It actually went to 88, 2 pennies above that area. Remember we talked about it earlier? It's hard to take that trade because that's the resistance area. All right. Carol, I do not trade Forex. We do have Forex prop trading here at Pristine, but I do not trade it. Okay. Drew, that's a great question. The resting bar should be in the upper 30 or 40%, right? So if this bar is $1, it's not, but if it is, that bar should be like 30 cents, the resting bar. Okay. All right. Yeah, the method will work in Forex. All right. I'm going to show you a couple more examples. Guys, again, same pattern. Wide range bar. Notice it's clearing this area. It's clearing this area. Wide range bar, consolidation bar, blast off. 60.45 is the entry. 60.10 is the stop loss. There it is. Give it a second. 60, I got in a little early at 60.42. Okay. You can see 2,000 shares in, 2,000 shares out. All right. So I got a little bit less on my target on this one. Right. I want you to notice though, I stop out too. See Twitter here? This trade didn't work. Okay. They don't all work, guys, but you don't need them all to work, right? 2 out of 3 worked on this day, and it's $2,000. And guys, you're done. 10 a.m., 30 minutes in the market, you're done. Take a look at that trade for a second. That's a 2-minute chart. So I'm out of this thing by what, 9:38 in the morning? So 9:32, 9:34, 9:36 it triggers, 9:38 we're exiting. We're done. Okay. Here's another example. Okay. Wide range bar, narrow range bar, blast off. 38.71 is the entry, right there. 38.49 is the stop. Judy Knoll, that's a great question. You can trade these on any time frame you want. I personally trade them on 1 minute, 2 minute, and 5 minute charts. Okay, but they're valid on 15-minute charts. They're valid on 60 minutes. They're valid on daily, weekly, monthly. That pattern is the same on any time frame. Okay, and guys, right here, $100 in 3 minutes. You can see the prints. 38.71 I'm in, 3,300 shares. So again, it's about a $700 risk, right? You're looking at about a 22-cent stop on 3,300 shares. So again, about $700. Okay, I took 3 trades, 1 break even, 1 stop, 1 winner. All right, so you make $700-800 that day. You're done. All right. Again, 30 minutes of your life. Okay, here it is again. All right. Wide range bar, narrow range buy. I buy at 27.40. My stop is 27.25. Blast off. Now it's a 15-cent stop. But notice the higher time frame. I'm above this area. Okay. All right. All of those things, Eugene, are great questions. I typically use stop market orders to buy, but you can use stop limit orders. That's what we teach. Guys, here's a 50% batting average day and still made $800. I lost as much as I won, but when I won big, and when I lost, I didn't lose big. Remember I said part of this business is about managing losers? Well, when I win 1,100 here, and when I lose, I only lose 200. All right? I'm going to have to go through some of these quicker. I only have about 15 minutes left, about 12 minutes left. Okay? All right? But again, 27.40. 15-cent stop, 23-cent target. It's about 1.5 to 1. Okay. Here's one, guys. How do you like them apples? Wide range bar, narrow range bar, blast off. $4 grand. $4 grand. And I'm out right here. 2, 4, 6, 8 minutes. It's just about how many shares you buy. You buy it right there. Stop down here. Done. Right? Okay. I'm going to get into that in just a second, Dan. Okay. This one I took yesterday, see 917? Okay, this one had 2 resting bars, so it's a 1, 2, 3, 4. Triggers right here at 22.16. Okay, 22.05, $900 later, $948 later. Okay, stock is gapping over this area. It's got room up to here. Boom, I called this for the chat room. Anybody in here that was in the chat room yesterday knows that that's true. Right? I called it in the chat room yesterday. Okay. All right. So, guys, keep your trading simple. Why overcomplicate the process? Okay. Why? We teach a lot of patterns, but you only need one or two to be good. Right? How many trades do you need? How many patterns do you need? Well, guys, I take 2 to 5 trades a day. Today I took 3. That's a pretty normal day, 3 trades. Okay. I trade 2 patterns. I trade 1, 2, 3s and breakouts are my main patterns. Now, I've been doing this 8 years. Do I trade a couple more? Yeah, I do. But the 1, 2, 3 I just showed you and breakouts are the main ones that I trade. Guys, making money is just a product of risking more. $100 trade, $4,000 trade. It's just a product of risking more. I want to show you guys something. Okay. See, in our prop program, we start our traders. They start with a $2,000 risk deposit. Okay, in our prop program. Okay, so the entry buy occurs before the 3rd bar is complete. Sometimes yes, DS. Sometimes that's true. Sometimes that is true. Not always. Now I want to show you guys something real quick because again I have about 10 minutes left here. I got to squeeze a lot into 10 minutes. We some of our traders are going, but Jared, with a $2,000 risk deposit, what can I do with that? Well, I want to say something to you guys. Okay, yes, Yolanda, I will show you one. Okay. Not everybody, all right, I know this could come as a shocker, not everybody has $1 million to trade with. Not everybody has $500,000 trade. See a lot of folks come in and they're like, look at my $300,000 P&L last year. And then you ask them, well, what's your account size? 1.2 million. So you made 20%? Okay, yeah, 250 grand's nice, but not everybody has $1.2 million. Some people only have 10, 20, 30, $50,000 to trade with. Some even less than that. So the question is, what can you do with less than that, right? What can you do with 5, 10, 20, $30,000? A lot, a whole lot, and I want to prove it to you. So I got a little bit kind of, I don't want to say annoyed, I suppose, but irritated that some of our traders saying, well, Jared, with $2,000 risk deposit, I can't do that much. I said, you're wrong. You can do a lot. You're just not going to make it all in month number 1. So last year, 2013, okay, I opened up an account, a real pristine prop account with my own money in it. With $2,100 in it. Why? Because there's a $150 fee when I opened the account, so it's really $2,000. Okay. January, the first month I had the account, I made $1,400. Now, are you impressed? No, $1,400 is not a lot of money. You're certainly not paying your bills on $1,400, but that's not the point. The point is you start small and you build, right? By May, we're making $5,400 a month, right? A couple months later, we're making $5,400 a month. Okay. A couple months later, we're making $7,600 a month. Okay? A couple months later, it's the same account, same year, we're making $11,000, $12,000 a month. Okay, again, not everybody's got $1 million to trade with. Not everybody has $500,000 to trade with. Okay? All right, so at the end of the year, that account right here, I have no problem showing the statement. It's right there. Started with $2,165, and I turned it into $51,000. Now, is 51 grand a lot of money? No, some traders make that in a month, but they're not doing it on 2 grand. They're not making 50 grand a month on 2. My point is, it's about good trading. Here's an account I took from 2,500 to 100 grand. Okay, so I'm trying to go to the traders out there that don't have monster accounts. You can be a good trader too. You can make a lot of money in this business without needing $100, $200, $300, $400,000 accounts. If you have that kind of money, I applaud you. Okay, I applaud you. All right. So, because this is a prop account, LW, great question. I got to spend the next 3 minutes talking about that. Okay. So I just want to show you guys, professionals don't make excuses; they make money. Here's 2 accounts, both my accounts. Okay, that's it. WTS JV13, 37 J Wesley. That's it. Okay. Who else here shows the full account statement? Now, why? Okay. Why do I use a prop account? About 5 minutes to talk about this. So I'm going to talk really fast. Access, guys. Access, right? When traders start, they don't know where to begin, right? They just don't know. You're going up against Goldman, Merrill, you don't know where to begin. You don't have an education. You just don't know what you don't know. A lot of platforms have high trade fees. You don't have enough capital, not enough buying power. You lack discipline. Well, let me break it down quickly for you. This is the difference between a retail account and a prop account. It costs at least $25,000, as Juan was just saying there, right? In terms of the pattern day trading rules, okay? Well, you need 25,000 to open an account, right? Well, you really need more than 25 because if you go under, a penny under 25, they lock you. So I call it 30,000, okay? Prop account, less, leverage, 4 to 1. I'm just going to say, sorry, Ray, I didn't even realize that. I apologize, okay? Leverage 4 to 1, leverage 20 to 1. Max daily drawdown, no limit, it's controlled. You know exactly how much you can lose, okay? Education, none. Chat room, none. Here, we give you a 5-day course, and you get free lifetime access to a chat room, okay? Commission rebates, none. Over here, yes. The only difference here is you cannot hold overnight in a prop account. You cannot hold overnight in a prop account, okay? That's it. Other than that, a prop account is way better. You can do so much more. So the question I ask people is, why wouldn't you use a prop account, right? Would you rather stuff 30, 40, 50, 100, 200 grand into account and you're wasting it, right? I mean, you go out and buy a rental property and then still have a prop account and a swing account, right? It's got better leverage, a better education because, you know, your E-Trade accounts, your Ameritrade accounts, they don't have education, right? They don't have chat rooms. All of that is part of the Pristine prop program here, okay? So it's a 5-day course, guys. The first 2 days are technicals. That pattern I showed you, the 1, 2, 3 pattern, okay? The 1, 2, 3 pattern is one of many patterns you'll learn. So we teach you support and resistance, money management, trade management, the different trends. Day 3, we spend the whole day talking about how to use your platform. You have multiple platforms to choose from, including Fusion, which is the one you saw today, okay? Why do we do it? Because a lot of people, well, when you start a new platform, you're not sure how to use it. How do you put volume on the screen? How do you change the time frame from a 1 minute to a 15 minute? A lot of people don't know that, so we teach you. Okay? It's a proprietary trading account, Julie, right? Where you use company money, you leverage yourself using company money. Okay? So you join Pristine's prop program, and we have, you know, a couple hundred prop traders, all right? And you go through a tier system, a level system. As you get better, we give you more money to trade with. Okay? And in return for that, we will take a small percentage of your profits, typically about 10%. You keep 90%, we take 10%. So if you made 10,000 bucks, we take 1,000, you keep 9,000. Why do we do it? Because you're using our money, right? You have to put a $2,000 risk deposit to do it. There's a fee for the program, right? You have to pay for the program, right? And then you can do a lot with a little. You don't need 25, 30, 40,000. What can you make on a $30,000 retail account? Not a lot, right? Because you're only leveraged 2 to 1 overnight and 4 to 1 intraday. Yes, Judy. Day 4 is a live trading day. I traded live for you guys today. Well, I do that for about an hour and a half on this particular day. I show you my pre-market routine. A lot of you guys are asking, hey, Jared, how do you find those patterns? I talk about that. Learn how to scan for patterns. I go specifically on how I find those patterns, where I find them, what I'm looking for. I talk about order types, right? I'll come in and I'll say, hey, guys, that's an ARCA market order. This is an ARCA limit order. And I'll explain the difference, right? We'll talk about, you know, trim, and we'll talk about stop limit orders and market orders and how to enter positions effectively. Whoops, sorry, I left that little. That's better. Well, I can't get it off. There we go. All right, sorry about that. Okay, so those are the things that you'll learn, okay, in this 5-day course. Okay, you guys are given 75,000 in buying power to start with. 75 grand. That's a lot, guys. Okay. No, you cannot use TradeStation. You cannot use TradeStation. Okay. Day 5, more technicals in the summary. But guys, day 4, my real P&L, and I explain everything, exactly how I trade, where I found the ideas. We start at 8:30, an hour before the market opens, and I go over exactly my daily process, what I do to make money every day. Today, you guys didn't get to see the scanning process. I just didn't have time. We only had 10 minutes before the market opened, right? So if you want to learn more about Pristine's prop program, again, I apologize, guys. I only have about 2 minutes left here, so I got to just wrap it. I'd love to spend another hour with you guys. I really would. Okay. Marty, if you're in the United States, you need a Series 56. We provide the study material. We haven't had a person fail it yet. We have over 200 prop traders. Okay. If you're outside of the United States, you do not need a Series 56. If you're inside the United States, you do. Okay, so if you have questions about it, please call us, please email a counselor, and ask about the promotion for the TradingPub participants. All right, so specifically mention TradingPub. Okay, otherwise they'll be like, I have no idea what you're talking about. Okay, we've been doing this 20 years, guys. Okay, I'm very forward and upfront. Somebody wanted to see a breakout, so I want to put that up real quick. That's a pristine breakout right there. Consolidation back towards that rising MA right at 333, and oh, as always, guys, I can't give it to you without showing it. This day, I only batted 40%. I lost more than I made, and I still made $1,000 that day. Even though I lost 3 and only won 2, I still made $1,000. Okay, that right there is a pristine breakout right here. I'll give you one more example. Here's one on TSCO. Okay, beautiful consolidation right there. Boom, blast off. 4 minutes, $1,800. Okay, and one more. There's another beautiful breakout, consolidating right back to this area, right at 114, entry, 113.30, there it is, okay? 113.99.5, the entry is 114, okay? 70-cent stop, I got $1.17, that's about 1.6 to 1, something like that. That's it, I told you, 1.5 to 2 to 1, I'm in, I'm out, I'm gone. Okay, so guys, I'm going to take 30 seconds. I don't want to say thank you to you guys. I want to say thank you to Cam, Rolly, and Yana. I really appreciate the time that you've given us here today. We really enjoy attending these events. And I want to thank you guys for attending the event. I hope you learned a little bit. If you have more information, please contact Amber or Ray or email us. Okay, again, I want to really say a sincere thank you to you guys. And we hope to see you in the future, okay? Here's my email just real quickly, and then I'm going to get off and let the next presenter begin, okay? Thank you very much, guys. Take care and have a good one.
Okay, well, thank you so much, Jared, for that terrific presentation on how you use the Pristine trading method to trade the markets. I think we all appreciated the live trades that you took today, especially after the open, and how you walked us through your decision-making process. I also liked your emphasis on simplicity and reinforcing the importance of price above everything else, and how your prop trading service works. I think that was eye-opening for me and several other people here in the room. So for all of you, those of you that are interested, I encourage you to take advantage of Pristine's Trading Room trial offer and the premium newsletter that they've also offered up here. As a reminder, all of our sessions, including the session we just had with Jared, are being recorded, and we will send out a follow-up email with a link to these recordings tomorrow afternoon to everyone that has registered for this event. So I'm pleased to say that we're tracking exactly on time. Our next presenter is in the room. Hello there, John. Nice to have you here. Should we do a quick little mic check to make sure that your audio